Good morning, everybody. This is the live market open for Tuesday, April 5th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Trade. Good morning, Fabian. Good morning, everybody in the room. Glad to be here. We have lots of action as we speak in markets. We'll talk about recent developments, charts and levels, the next 24 hours. And of course, your questions are always welcome. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxrate-forex-live-video. So what's going on in markets? Well, the mood is negative. Dark clouds. I must say that also here in Barcelona, it's raining. But in markets, we have falls in Asian stocks, falls in oil prices, and this results in safe haven flows, and we have a breakout. So the first chart will start for a change with dollar yen. As we speak, it's losing even more ground. I just released an article and I quoted a price of 110.50. We're already at 110.32, reaching new lows as we speak. The safe haven Japanese yen is gaining traction. We fell below the previous lows. We talked about this line in the sand at 111, temporarily breached a few weeks ago, only to undergo an intervention, or what looked like an intervention by the Bank of Japan. But now fresh negative mood, and we're at fresh lows. The next line of support is naturally the round 110 level, very round level, okay, which was also resistance right here back in October 2014. Anyway, in October 2014, the Bank of Japan introduced the second big QE program, the QQE2, what was called then, and that sent dollar yen way above 110, reaching, the peak at the time was 121.60, and then we had it trading here and up even to higher ground. Anyway, we are now at the lowest levels in almost 18 months, in almost a year and a half since October, late October 2014. We have not seen these levels. Okay, so quite a downfall. Let's get back, let's zoom in a bit, see the downfall on the hourly chart, for example. Quite a big fall. The drop in the Japanese yen began also already yesterday, when the mood worsened. What's going on? Well, there are a few reasons why things are looking worse in markets. The Panama Papers, we talked about that yesterday. That could have implications on politics all over the world. That could move money from those offshore safe havens, which we normal people don't have access to, and it'll begin moving around. But it already has, for instance, implications in Iceland. Expectations are that the government will not survive because the prime minister is implicated in the scandal of having offshore accounts. There are some reports saying that also the late father of UK Prime Minister David Cameron has passed away, had offshore accounts. So it's sort of lots more trouble for David Cameron already with the Tata Steel crisis, with the Brexit fears going on, with crisis within the party. Anyway, Panama Papers are just one of the reasons. Too much oil in markets. When we know that when oil falls, we have stocks falling, and this moves money to the safe haven currencies. Currently, the yen is practically alone in being the safe haven. We had euro is not as safe as it used to be. Anyway, the IMF warned about the global economy, warned about China. Also, we have the IMF embroiled in its own crisis in Greece. So many, the troubles are taking center stage, and the good stuff is sort of on the back seat. Okay, so let's look at other events and other charts. Data coming out yesterday was not that bad. Okay, so we looked at the yen, quite a big downfall. As I said, risk off. Let's jump to oil because it's in context. Okay, we had the WTI crude oil managing to hold above 36. Now we're at the lower handle at the 35 handle. Okay, so further support at the round number of 35. We learned this week that Russia is exporting more oil than expected. More oil than ever. They're exporting, pumping out oil at record levels. We learned that oil shorts are back in control. market has become negative on oil for the first time in 8 weeks. Not such a long time, but it's still negative. And that Iran and Saudi Arabia are sort of limiting, that Saudi Arabia is limiting Iranian ships to enter its waters. So this also doesn't look good. I mean, it shows a level of desperation. Okay. So question, good morning, Luca. Question from Fabian. Why is the euro not acting as a safe haven anymore, given the added QE and negative interest rates? It should be more safe haven now. My explanation is that because of all the QE, the fresh QE, that means we still, what happened last time is that, good morning, Sinatra as well. We've seen we had the first round of QE announced in January 2015, implemented in March, okay? That hurt the euro, of course, but eventually after, it took some time, it took a few months, and this became, it turned around. It means was already too much money flowing outside the Eurozone because of the negative rates in QE, that each time in times of trouble, the money was repatriated. But we now have just a fresh round of QE. It was announced in March, and the implementation began right now in April, okay? So there's actually more money now, fresh money flowing out. We might see the safe haven pattern return perhaps quite soon, okay? But for now, it isn't working, and the Eurozone has trouble of its own. I think that Brexit, well, it could make some trouble for the UK. The chances are still low, but it'll also have a devastating effect on the Eurozone. Perhaps not immediately in terms of trade. The Eurozone is bigger than the UK, of course. The European Union in general is much bigger than the UK. But it could be the beginning of the end. It could sort of be a big domino that could lead countries out of the Eurozone, or could damage the European integration in general. So I think the euro has its own troubles, okay? And own inherent weakness. We learned this morning also that German factory orders disappointed. Anyway, a few months ago, all these bad news from Europe would strengthen the euro because of these safe haven flows, okay? But now it doesn't work like this anymore. Look, the euro is relatively more stable than other currencies, okay? Not that much, but it's also falling against the US dollar and falling, of course, much more against the Japanese yen. The Japanese yen is the king of safe haven currencies. The dollar is lagging behind, and maybe the euro is number 3. The euro used to be a strong number 2. Anyway, euro dollar, well, very choppy. You can draw here some lines. Perhaps we're seeing some kind of an upwards trend line right here that might be on the verge of being broken. I still look at 113.65 and 114.10 as lines here. The next significant line is only at 112.50. Movements again in euro dollar are not as strong as quite a few other currencies. Pound dollar, bigger moves here than in euro dollar. 142.34 is the current level. So we did have some kind of recovery in the pound. Yesterday we had construction PMI coming out as expected. Not a disappointment. So no bad news is probably good news for the pound. And currently 142.33, further support 141.75 and 141.25. Also becoming a bit choppy. Let's look again at dollar yen, bouncing from the lows of 110.30 to 110.50. But this is quite a big move on dollar yen. We'll soon see a few yen crosses and see even bigger moves over there. Dollar CAD, of course, the Canadian dollar, a victim of oil prices. Could have been worse. We're rising above 131.80. Next resistance 131.75. Okay. Aussie dollar did show some strength. We had a rate decision in Australia this morning. The Reserve Bank of Australia, of course, left the interest rate unchanged at 2%, widely expected, and they didn't complain too much about the Australian dollar. They did say that the recent strengthening of the Australian dollar sort of goes hand in hand with stronger commodity prices. They also said that He also said that, of course, further appreciation could make things complicated for Australia, but at the moment, once again, they just did. I mean, their approach was sort of no worries, okay, no worries, mate, and that's the spike here you see in Aussie dollars. So the Australian dollar was sliding with all other risk currencies, and when we had, and alongside the fallen Japanese stocks and the strengthening of the Japanese yen, once the RBA came out, it was at 4:30 GMT. That means nearly 3 hours ago, less 2.5 hours ago, we had the Aussie jump all the way here. Now with this resumption, as we speak, we're seeing the yen strengthening, the Aussie falling, really a risk, in this case, Aussie falling against the US dollar, weakness in risk. The Kiwi also here we see, I was talking about the Kiwi showing a lot of strength in previous days. Things have changed. The Kiwi is now free falling. It does not have the support of the central bank like we had in Australia. So we're back. Quite a big deterioration. The 68.20 line, which was a clear separator of ranges, works once again as separating the ranges here, where support is only at 67. Quite a big fall in the Kiwi in terms of percentage points, 0.8, 54 pips to the downside. Okay, 68.20 now works as resistance. Dollar Swiss, very, very choppy, off the lows, you could say that, but not going anywhere fast. Too many lines. I have here too many lines. Anyway, I guess this is a better approximation. Okay. 95.70, 96.40 remains resistance. Euro Swiss, very, very stable, just above 109. It's falling a bit. Let's see. Well, 20 pips to the downside. Nothing to get excited about. Remains the 109 level. Okay, here we have Euro Pound. We had a break above the round 80 level. We talked about that yesterday. We're still battling around that line. So this morning, the cross is a bit higher, but it did manage to recover. The pound did manage to recover yesterday. Okay, so the battle on the 80 level continues. 70, still looking at 79.30, the previous line of resistance, but things are becoming more choppy also here. Euro yen, here we can see a big fall of nearly 1%. 125.50 support at 125. 128.20 was the high. We had several attempts to break higher, but now we're falling. If we break under 125, next real support is only at 123. Okay, and pound yen, big breakdown as well, 1% lower. We broke under 158.50. The next line of support is only at 156.10. Okay, followed by 154.65. So we had it trade in range here, 158.50 to 160. Went to resistance at 162.50, and then a breakdown once again. Okay, this is really the moves in pound yen are more significant. It's a roller coaster pair, quite exciting indeed. Okay, so that's the roundup of currencies for this morning. The big story is the strengthening of the Japanese yen. There were rumors, there was a report that the Ministry of Finance in Tokyo is meeting with officials from the Bank of Japan to discuss market events, okay? To try perhaps to act against against the strengthening of the Japanese yen. So the Japanese authorities are clearly not content, not happy with the situation. If we zoom into the 30-minute chart, let's see. Well, we're seeing some kind of strengthening, but this does not look like Bank of Japan intervention. Not yet, at least. Okay. Yeah. Okay, so thanks for the comment, Fabian. Yeah. Oh, quite an I was looking at other currencies, not focusing on the world's most popular currency pair, euro dollar, and now we're seeing it fall. So maybe it's losing trend line support. Let me try to draw that here. I'm not such a fan of trend lines, but and I'm not such a fond of drawing trend lines in this specific software, but I guess here we are. So perhaps we're seeing a breakdown of this trend line. Okay, if you wish. Anyway, the euro, as I mentioned, has trouble of its own. So the euro is listening to me and falling. The lowest session lows so far, 113.49 is the low, or around a pip above that. Anyway, so it's the yen remains the ultimate safe haven. We're seeing yen number one, Ichiban, as they say in Japanese, a few words that I know in Japanese. Dollar is second in line, all the rest are falling. Also, the Kiwi, the Aussie, and CAD, as we speak with the European Open, are extending their falls. We are seeing some stabilization in dollar yen, but not going too far. Even lower lows. Each time I look away from euro dollar, it falls. Okay, so we talked about, we did a roundup of charts. Let's mention a few events we had yesterday. Overnight we had two Fed doves going hawkish. Okay, Evans, it's not his first time, but Evans says he does see two rate hikes this year. And also Rosengren of the Boston Fed. He hasn't spoken for quite some time, Eric Rosengren. Anyway, he also is considered a dove, and he talked about rate hikes as well. But this might help the US dollar just a bit. But remember how Yellen killed the US dollar last week by going extremely dovish. Yellen said that lots of uncertainty in regarding inflation, worries about global growth, and that the Fed needs to be especially cautious about raising rates. So, and that came after a few of the doves and the hawks were relatively hawkish. So Yellen in the rate statement was very dovish. Then we had various Fed members going hawkish. The US dollar strengthened, but when Yellen hit the dollar hard once again last week in New York, it was Tuesday, the dollar collapsed. Now we're seeing with the safe haven flows to the yen and a bit to the US dollar, some strengthening of the US dollar, again, second in line to the yen. But but markets are certainly cautious. Remember that on Thursday we have another speech by Fed Chair Janet Yellen. And let's go back to the slide. Here we have more things that I mentioned with the Panama Papers. I think we have more revelations coming up during the week, maybe next week, and this thing will go on and on. Let's see if the Icelandic government falls. Of course, it's a country of 320,000 people, but it certainly, this could be the first government to fall on this scandal. Anyway, data that we had yesterday, the Eurozone business sentiment missed expectations. Unemployment rate in the Eurozone came out at 10.3 as expected. It didn't surprise to the upside. We had PPI missing just a bit, but that's already no surprise. We know that inflation in the Eurozone in general is quite weak. UK construction PMI, I mentioned that it came out more or less as expected, even a tick higher. US factory orders fell 1.7 as expected. Australian trade balance missed a bit. Anyway, nothing. There was no huge surprise. It's mostly about the mood. Thanks, Sinatra. Spanish market services slightly better than expected. Let's look at the calendar. So this is the FX Rate calendar on Forex Crunch. I had some technical issues yesterday with the calendar here, but it's all good. Good guys at FX Rate helped me resolve it. So services PMI here in Spain, the fourth largest economy, is up from 54.1 to 55.3, above a score above 50. Thanks, Sinatra, once again. It reflects growth, and 55.3 is, I would say, already good growth, not mediocre, not very slow. So we have more of this coming. I think I mentioned this before, but with factory orders missed in Germany, they fell 1.2 instead of a rise of 0.2. was expected, but this came on top of an upwards revision. Factory orders, that in Germany, that's quite a volatile figure. So it's bad news, of course, but not devastating. We have bounces up and down here. Okay, and further this morning we have at a quarter to 8 GMT, quarter to 10 here in the old continent, the same figure, the market services PMI from Italy, then the final read. Okay, it's a revision from France, from Germany, and from the Eurozone. So manufacturing in Germany, that's the most important one, and that's already behind us. So I'm not sure we'll have significant market movements from these PMIs. Worth mentioning, worth following, but not that significant. A more important event that we have this morning is actually the same figure, but coming out from the UK. In the UK, the services sector is huge, and now we're expecting a bounce from the lows of 52.7 to 54. It's, of course, the biggest and most important sector, and it's the last out of 3 PMIs, and that means that it's going to be, it usually has a bigger market impact. As I say always with UK events, watch out for the market front-running the publication. Perhaps there's a leak in the 15 to 20 minutes before the release. Okay, that's at 8:30 GMT. So in the hour surrounding it, we have a pre-reaction, we have an initial move and then probably, of course, a reaction to the actual data. So watch out for front running. If we have a fall and then the figure comes out slightly worse than expected, then the pound could bounce on a buy the rumor, sell the fact. Same thing for the other way around. If we see the pound advancing towards the publication and then we have a slight beat of expectations, then we could see the pound fall because of the buy the rumor, sell the fact. Things could already be priced in, okay? Lucas says here, IMF letter hitting the euro dollar on Greece bankruptcy fear. Yeah, that story came out over the weekend. WikiLeaks released a conversation between 2 IMF officials. One of them is Paul Thompson, and the other one has a very long name, which I can't remember, Viladescu or something like that. Anyway, they were talking about brinkmanship to push, to create a credit event for Greece in order to force Germany to push Greece further on pensions or something like that. It's a very, very sad story. Unfortunately, I'm not following it that closely. That's because I think eventually the current Greek government, which is also the previous one of Tsipras, basically gave up the fight and will eventually accept whatever they're being told. Like all the previous governments of Papademos and Samaras, they did give a fight for 5 months, and it was a very dramatic story in the first half of 2015. It's also less exciting without Yanis Varoufakis. Anyway, IMF, all these leaks, of course, put IMF in bad light. The Greek crisis, it mostly shows us, I think, that the Greek crisis is just still with us, that nothing has been resolved, that Europe is still mired in the debt crisis. Remember that migrants are flowing to Europe via Greece. Greece has to absorb, deal with all the migrants while its economy is collapsing. We've seen last July how European powers were divided, how this event left everybody scarred. It also goes in the context of the Brexit. IMF and those leaks feared that all the focus on the Brexit could move the German and French eyes off the ball regarding Greece, okay? And of course, as I said, a Brexit could endanger the European integrity. So it's also, what you mentioned, Luca, is also, it's another leak. It came a day or two before the Panama leaks. That came out Sunday night. Anyway, something is rotten in all those kingdoms, and it also adds to the global doom and gloom. So it's not that markets care too much about Greece at the moment, but the lack of European unity of a path forward, which joins other policy problems all over the world, and uncertainty about global growth, that just sort of adds to the pile. Okay. Let's go to further events today. I had them up in the slide, so that could be comfortable. Events for today, we have now the services PMIs. Spanish one came out better than expected. UK services PMI, as I mentioned, expected to rise at 9 GMT. 11 here in the old continent, we have the Eurozone retail sales. Okay, it's not that important because we already have the German retail sales and the French consumer spending out. At 12:30 GMT, we have both the United States and Canada releasing the trade balance figures, and that should tell us not to trade dollar CAD at that specific moment. Okay, US trade balance is expected to widen just a bit to over 46 billion US dollars. And in Canada, there's also a deficit. Also here, it's expected to widen. Of course, if we have a beat in the US and a miss in Canada, that could move dollar CAD a specific direction. If we have a divergence, if not, it's not that important. And the big event for today is the ISM non-manufacturing PMI. Okay, this is a services sector report from the ISM. It has more impact in the United States than market. It's the biggest sector. Perhaps it's a bit less important this week because it comes after the non-farm payrolls. It does not serve as a hint for the non-farm payrolls. I would say, nevertheless, we already have the non-farm payrolls out. We already have the ISM manufacturing PMI out. It came 90 minutes after the NFP. Now we have an isolated release of the report on the health of the services sector. So the employment component is a bit less important because the NFP is out. But new orders, backlog, prices, all of these are important. The services sector is by far the largest in the United States of America. We had it deteriorate a bit in recent months from much higher levels. Okay, you can see the chart here. We were already around 60, okay? And we've seen it fall, which was quite worrying. Now we're expecting a small rise, same as in the United Kingdom. At the same time, we have the job openings report. This is the Fed's favorite, perhaps, jobs report. The problem is it's a bit stale. It's for the month of February. No big changes are expected to rise from 5.54 to 5.57. This reflects a million, of course. This reflects the number of job openings, okay? So it's more of a forward-looking indicator, even though it's lagging in its timing. Another interesting part of this report is the level of quits. When a person quits her job, it implies, confidence to find another job, confidence that the next job will be a good one, okay, even though that person needs to learn new stuff. And in many cases, it reflects higher salary, okay? So more quits mean more confidence in general about the economy and perhaps higher inflation. Okay, but movements have been so slow here that it hasn't been such a big market mover. I'll just mention that before the ISM non-manufacturing PMI and JOLTS, we also have markets final services PMI. Market is less important in the US than in other places. It's expected to be confirmed at 51 points, which is lower than ISM and reflects only very mediocre growth. Okay. For those of you trading the Kiwi, at some point in the afternoon, European afternoon, probably after the ISM non-manufacturing PMI, we'll have the GDT price index, the price of milk. It comes out every 2 weeks. We had 4 consecutive drops, 1 rise, and then back again to the negative side. Doesn't look too good for the Kiwi. The Kiwi is now a bit weaker, so it could be another blow, but perhaps we'll have it rise. We don't have expectations for this. Perhaps last but not least, well, maybe not last, the API weekly crude oil stock. This precedes the crude oil inventories tomorrow and has some market impact. It's released a bit late at 8:30 GMT. With the sensitivity of oil prices, perhaps it could have an impact. I think there was one event I wanted to mention for the night. Yes, that's the services PMI. in general, it's a day of services PMIs. In China, if China is moving away from manufacturing and into services, away from investment and into consumption, we should see this figure, the independent measure of services in China, move to the upside. In recent months, it hasn't really done so. Let's see if it happens now. So all in all, quite a busy day. Services PMIs have the upper hand. Yeah, I think we talked about everything here. Any questions? Or let's talk a bit more about charts. Let's see what's going on. Or perhaps refresh this thing. Implied probabilities of a rate hike according to the CME group, FedWatch. April is off the cards, of course. In June, only 26%. I think one of the things, one of the things that Evan said is that, Rosengren said, is that the Fed, that the markets underestimate the pace of rate hikes. So let me look for the exact quote. Yeah, here's an article from CNBC I'm reading. Rosengren to markets, you have it all wrong on rate hikes. I guess the headline is a bit provocative and that's not his exact wording, but future markets are wrong and the Federal Reserve the Federal Reserve likely should hike rates sooner than they imply, Boston Fed President Eric Rosengren said on Monday. Okay, and these were prepared remarks. It wasn't sort of something he pulled out of his sleeve in an answer to a question. So perhaps what we're seeing here is a bit exaggerated. Okay, well, it was already above 80% against, now it's 74, as you can see from the previous day volatility right here. So maybe his words did have an impact. Maybe this, I said, this also has a positive effect on the US dollar, but it's mostly the risk-off sentiment, which is working against all currencies, except, of course, the mighty Japanese yen. So as we speak, we've seen euro-dollar reach a low of 113.44 and bounce a bit to the upside. Again, if we draw this trend line, I've drawn here, we're under the line, under 113.65, which provided some support. Okay. I see a comment by Luca. First signs of divergence for the dollar index in the channel bottom. Okay. So yeah, you shared your chart here. I'll share it with everybody on the screen. Thanks for that. So yeah, we're seeing the dollar index trade in the channel here. And now it's, looking at the bottom of the channel. That's even better. So yeah, so far it's holding on to the channel. Let's see if it moves to the upper side of the channel and even further above. So I see here a channel on US dollar close. Okay. So thanks for that. That's certainly interesting chart. Trends of the US dollar. All right. Anyway, we are seeing a stronger dollar this morning. Well, except of course the mighty Japanese yen. Yeah, thanks, Luca. Good stuff. We're here to help each other. All right, let's take another look at dollar yen. Also here we found, so we had the storm so far and now things have calmed down, at least just a bit. Also dollar yen reached a low of 110.30. And now we're 25 pips above this line, okay? If we fall further to the downside. So the Japanese authorities are speaking up. The chief government spokesman, Suga, he says that they will continue to monitor markets. I mentioned before that we had meeting of the Ministry of Finance and the Bank of Japan, the top financial authorities in the land of the rising sun, and they will keep the stance of making the appropriate response when needed, and of course they're watching markets. They're watching markets with a sense of an urgency. Okay, so this is high rhetoric. Again, markets have so far defied the Bank of Japan, the Ministry of Finance, by each time we had some kind of an intervention. And also when they not only intervened, but actually when they went forward and set negative rates, it lasted only a few days. Dollar yen went from 116 to 121.50, but that, I can show you this on the chart. That's this rise. Okay, here they began talking about intervening, sent it all the way to 121.50, but from there market said, you're not serious, began selling dollar yen, buying yens in general, and attempts to intervene, which we've seen afterwards, didn't really succeed. Okay, so yeah, so they're showing us that they don't like it, but yeah. Question here, do you think euro dollar will hit 113 this week? It's possible. We're not that far from that, so I wouldn't rule that out. If we have further strengthening of the US dollar, it could happen. I would watch out. The big event for the euro this week is a speech by ECB President Mario Draghi coming out on Thursday. Again, the euro is not the weakest currency against the US dollar, against the Japanese yen. We have weaker currencies. One example is the pound, but commodity currencies are weaker. That gave the yen 15 minutes of respite so far. Yeah, thanks, Luca. Yeah, indeed, things are moving. I mean, the market loves those yens, especially when Japanese stocks are falling, especially when the S&P is falling, when oil prices are falling. So, yeah, they can talk, but they'll need to act. And also, action is probably not enough, as we've learned from the episode of the negative rates. Well, yeah, so, yeah, if we move to just to have a closer look at this 5-minute chart, perhaps this is an intervention, but I'm not sure. Anyway, if we're now only 15 pips above the lows, so I wouldn't say that's this job owning is a big success story. At least not yet. Maybe they'll surprise us further along the road, but so far, not a lot. Okay. Another look at oil prices. Also here, we're scratching the bottom of the barrel, one of my favorite expressions. So 35.22 is the low on WTI crude oil, and we're 2 cents above that. So in general, negative mood. Okay. And take another look at euro dollar. Above the lows, but not going anywhere fast. All right. Just mention further events this week. What we had so far, the rate decision in Australia gave a temporary boost to the Aussie. Services PMIs, that's today. We talked all about that. Meeting minutes from the Fed tomorrow. Big event. Remember, the minutes are in theory old. In practice, they're revised until the last moment. And why don't I have these events here? Yeah, they were reported only afterwards. Anyway. Okay, Yellen and Draghi talk. Well, not with each other, but yeah. A question here, do you think David Cameron leadership is actually in risk on the Panama Papers? No, I mean, not only on the Panama Papers. I think it's a bit of an old story of his late father. His father died in 2010. So it could get worse because we could have more revelations. This is just another point with The rebellion with his party, prominent Tory leaders, Ian Duncan Smith and Boris Johnson and a few other names there, ministers in his government, campaigning against him. That means campaigning for a Brexit. The crisis in Tata Steel, and the government currently doesn't really know what to do about that. They didn't rule out nationalizing steel industry or not. It's unclear. The economy isn't doing so well. Terrorist attacks are, of course, strengthening the Brexit camps. You name it, there are lots of issues there. And I still think that there's a better chance that Brits will vote against the Brexit. And in this case, that'll be a huge sigh of relief, not only for the Eurozone, not only for Britain, but also for Cameron's political career. Because if he wins there, like he won in Scotland eventually, that would, of course, shut up the mouths of all his opponents. But he has a rough 3 months. We could have more revelations about those Panama Papers implicating him, implicating other ministers, Tory donors. This is only the tip of the iceberg. Remember, it's only also one law firm in one safe haven country, okay? One fiscal paradise. So we could have more things rolling out and people opening their mouths. I think this story will accompany us for many, many months. And perhaps we'll have more leaks. Anyway, it's a huge, huge leak. Okay, let's get to the wrap-up for today. This is the wrap-up for the live market open for Tuesday, April 5th. We're seeing a negative mood in markets with oil falling for various reasons. And Japanese yen is the big story. Dollar yen is at the lowest levels in a year and a half. The dollar is second in line, also thanks to two Fed doves going hawkish. That's Rosengren and Evans, still seeing rate hikes, saying that markets are underestimating the pace of rate hikes. We have the Panama Papers, the Panama leaks, hitting the Icelandic government. Also, David Cameron is implied. Also, companies and banks all over Europe, all over the world. This is an ongoing story. Yesterday, figures mostly came out as expected, with the UK construction PMI giving a temporary relief to the pound. And also worth mentioning is that the RBA was not too excited about the Australian dollar strength. Despite the negative mood, the Australian dollar had an hour or two of rises because the Reserve Bank of Australia says that the rise in the value of the Australian dollar goes hand in hand with commodity prices, and in general, they're quite relaxed on the economy. Today's agenda, before we move to the charts in this wrap-up, we had a miss in German factory orders. We have services PMIs, at least one out now from Spain, coming out a bit better than expected. It's services PMI day. In the UK, services PMI comes out at 8:30. Should be a significant event for the pound. Like every month, a rise from the bottom is expected from mediocre growth to slightly better growth. Okay, to 54 points. Should be interesting. At 9, we have GMT, we have the retail sales. At 12:30, we have US and Canadian trade balance. Could be messy for dollar CAD. Both countries are in a deficit. The big event for today is the ISM non-manufacturing PMI, a report from the most important institution, in terms of purchasing managers indices in the United States, about the state of the biggest sector. Employment component this time is less relevant because the NFP is behind us, but new orders and the headline figure, of course, are important. Also watch out for JOLTS, job openings. It's a bit late for February, but still watched by the Fed. Kiwi, that is hit quite hard, has the milk auction and the Chinese services PMI overnight, completing the long round of services PMIs. Charts, well, now we're seeing euro dollar bounce from the lows, already 20 pips off the lows, and trying to battle this previous support line. So that's where we are. And just a second. Yeah, sorry, had some confusion here. So anyway, euro dollar is relatively stable, sliding, but not the worst. 112.50 and 114.10 are lines to watch. Pound dollar sliding 142.20 at the moment. 141.75 is further support. 142.80 is resistance. Dollar again, as I said, the big story. The low so far 110.30. The lowest level since October 2014, when the BOJ introduced the second big round of QE. Dollar CAD with falling oil prices. The Canadian dollar is weaker. Dollar CAD is higher. Well, close to the highs of the day. Next resistance 131.70, followed by 132.20. Support at 130.80 and 130. Aussie dollar, well, already erased all the RBA gains and reaching the lows of the day at 75.60 at the moment. 75.30 is some support. It's become a bit choppy. Kiwi dollar, also one of the bigger losers after it was one of the stronger currencies and gained a lot of ground at 67.75 at the moment. Support at 67, resistance 68.20. The loss of this level was followed by an attempt to break above it, but it didn't work out, so the Kiwi has better technical behavior. All in all, commodity currencies are suffering. The yen is stronger, clear risk-off mood, more mellow, moderate moves in the pound and the euro. Mood is negative. Let me just another look at oil prices. Remember, bad mood and lower oil prices go hand in hand together. WTI broke under 36, and here we are. 35 is the next level. Okay, so that's it for the wrap-up for today. As I said, the markets are certainly on the move, and negatively means a stronger yen and weakness for all the rest, more or less. Let's see what the ISM non-manufacturing PMI brings us. Anyway, so that's it for today. Thank you very much, everybody, for coming. Wish everybody a safe and successful day in markets, and we'll be here tomorrow. So until tomorrow, that's it. Thank you, and bye-bye.